Good evening everyone, Santal here. Can everyone able to see my screen and hear my voice clearly? Hi Prashant, hi Deepak, hi Sudindrabath. So how was yesterday's session? So Vidya will be your mentor for clarifications and whenever I'm not available, mostly I'll be taking the class. So yesterday it was like an unavoidable situation. I have to be outside of office. Thank you. So let's revise yesterday's session. So let me try to put it in a very simple way. So how to understand still more easily, and let's get into the today's subject. So nothing but we are going to learn today only based on candlesticks. So let's learn that. Just a minute, few more members has to come. So let me check. Let me take the course schedule. Yes, everything is there. So we'll wait for 3 minutes. We'll start. So I'm using my different PC. So that's the reason this resolution is not getting fit. Okay, let's start. So curve theory in the sense understanding to take the positions without any kind of technicals. So market fluctuates like this. Market fluctuates like this. So we should not take the positions on the top. We should not take the positions on the top. That is long positions. We should not take the short positions on the bottom because already market has given enough downtrend. So there is no confirmation, there is no assurance that it will reverse from here. But let's not take a risk by taking the positions at the bottom of the stock or market. Clear? For example, let me show you a few more stocks so that you can able to understand easily. So when we take this Reliance, so when we take the stock, so now you can see here, this is at the peak of the market. This is the peak of the market. So for seeing the curve, just a minute, let me change my. So now you can see here, while seeing the curve theory, you have to see at least for 3 to 6 months. Minimum it should be 3 months. Minimum it should be 3 months. So I'm taking the chart from August, September, October, November. So now you tell me, are we in the bottom of the curve or in the top of the curve or intermediate? That is in the middle level. Can I get the answers? Yes, Mr. Bath, others, Madhusudan, Priyaranjan, Vinod, how? Samir, I could not able to understand how you are telling you are in the bottom of the curve. So we are here. We are our current market price of the Reliance is 1468, 1470. So we are in the top of the curve. We are in the top of the curve. See, simply you can draw a line. Simply you can draw a box. Okay. Simply you can draw a box. No technical parameter, no measurements, no analysis, nothing is required. You can see here top of the curve, bottom of the curve. You can see here top, bottom. So once market comes here, you can go for a long, or here you can go for a short. So this is a candlestick pattern. This is a candlestick pattern to trade. So tomorrow market is cutting this level, we can go for a short with stop loss here. So all those things we will be seeing. Okay, so when you see simply, when you see in general, without say like a layman, okay, say like a layman, if you look at the market, now it is in the top of the curve. Now market is in the, that is market in the sense Reliance, this particular stock in the top of the curve. Okay, that's okay, Samir. So the Reliance is in the top of the curve. So this is absolutely, it's a wrong place to go for a long. Number one. Number two, I am not telling that Reliance will go, we will not go this much. It will go. But taking the positions long here is risk. The risk percentage is more. Is everyone understood? Any doubts? Same like that, you can see here. When you see here, it is in the bottom of the curve. So don't go and short at this place. Don't go and short at this place. So when we have, say like intermediate, in the sense this place will we can consider as an intermediate level. So at this place we can decide, we can take a equal risk of 1:1 ratio and we can try a trade at this place. But don't go for a short here. That is absolutely wrong. Don't go for a long here. That is absolutely wrong. Are we clear? Can I get one line confirmation from everyone? Because if you don't understand this concept, the further consecutive learnings may go wrong. Are we clear? Because the location is very, very important. So we tell this as a location. It's not, it's more like do, yes, it's more like don't. What we have learned here is what we are not supposed to do. Many things we will be learning here in Stock Phoenix webinar. We will be learning many things what we are not supposed to do, because when you ignore, when you kick out 100 questions, 100 no's, there will be only one or two options left out. So that will be the best option. Sir, can you please question other using other example? Okay, let me come. Bottom don't sell, top don't buy. That's perfect. So I'll show you some other option. For example, let me take M and M. I have not seen this chart for a long time. Let's see this chart. So now you tell me, it is in the top of the curve or in the bottom of the curve? Answer quickly. So let's get into the next subject. Because it's just a, yes, it's in the middle of the curve. It's in the middle of the curve. Here you can take 1:1 risk reward ratio and you can start trading. Yes, you can trade. You can go for a long, you can go for a short. But at this place, see here, at this place, when we see this as a, if this is acting as a curve theory, so this area is acting as a top of the curve. This area is acting as a top of the curve. Don't go and buy here, because from bottom it has already reversed. So from here we are supposed to go only for a short. You can see here from 655 it has crashed badly. Okay, so this is general observation. Just by opening a daily chart and seeing the 3-month chart, you can tell that I will trade, I will not trade. Number one. Number two, so this is the wrong direction. Understanding the direction is very, very important in stock market, because we will get 100 news. Even if I'm telling that don't watch news, some of your colleagues will come and tell, so this company result is going to be extraordinarily good. So I got an insider news, take an option, take a future, try some money. Don't trade on all those things. We are not supposed to do all those things. See the location. If it is in the wrong location, don't trade. Clear? So we are entering into the next topic, candlesticks. Again, a revision. So just to summarize this again, when you see a red candle, this means it's downtrend. When you see a red candle, it's a downtrend. Don't go and buy the stock when candle is in red, and don't go and short the stock when candle is in green. Are we clear? The first thing which we have to understand immediately by seeing the candlestick is, if the candlestick is red, don't buy, and if the candlestick is green, don't go for a short, because it clearly indicates it's a downtrend. Something is falling down, something is falling down. So how can you anticipate, or how can you decide, or how can you conclude that the fall will be only this much? So when it comes here, I'll buy here, it will reverse. No, it is not like that. We are not supposed to do. When we see a red candlestick, we are not supposed to buy, and when we see a green candlesticks, we are not supposed to sell. So for both the candlesticks, high and low remains the same. High and low remains the same, and open red for a red candle, open will be on top and close will be on bottom. So we should understand the psychology of the candle. That is very, very important. If it is a red candle, open will be on top, it might have gone little high, after that it came fully down, and after that it went little up and closed. So this is open, high, low, and close. So this is called as OHLC factor, open, high, low, close factor. And for a green candle, open will be always on bottom, and it might have came little down, market might have came little down, and again it rallied, it went up completely and came little down and closed. So this is open, low, high, and close. Are we clear? When we see a red candle, it is market is going down, so do not go for a long position, we should not buy. And when you see a green candle, market is going up, don't go for a short position, don't go for a short. I think my internet is clear. So Mr. Bajaj, you have to check your connection. So any doubts in the properties of candlesticks? So now let's see the doji candlestick, and let's learn about the trade setup. Just we are revising the yesterday's class, so it may take another 5-10 minutes of time. After that we will start understanding the logic. So now listen carefully. If you understand the logic now, if you understand the logic of making this 8 points, then the same is applicable for all the candlesticks. The same is applicable for all the candlesticks. Let's see one by one. So this PDF I'll upload in the backend. I have already uploaded in the backend, and I'll put this in the trading in your Telegram channel. In live market with a red candle next to a green candle, then also market is high. See Aditya, the thing is like, when we see a daily candle, and if the daily candle is in red, it is not the right time to buy. And when you see a daily candle, and when you see a daily candle is in green, that is not the right time to sell. We are speaking only about daily candle and not in the lower time frame candle. Even in lower time frame candle, say like 15 minutes or 30 minutes or 1 hour candle, okay, so if you see the candle is red, why do you want to go and buy? It is red in the sense it's clearly, it's a downtrend. So let me show you one more example. So there is no doubt in asking the repeat questions. So let me explain you again. You can see here. In Doji, I have a question. If we see the stock, if we see in Doji pattern and we can trade in futures, then Result will be same. I'll come Mohit. Is audio is not audible, any problem? Can everyone able to hear me clearly? I think internet is pretty good, and the system which I am using is also a new one only. So if anyone is having internet connection, you have to check yourself, because say like if something is not working, so what happened? I'll be getting messages continuously. My internet is Airtel fiber connection, Airtel fiber net, and we have BSNL also. Both are fiber net. Yes, red candle market is going down, so no logic of buying. Yes, that's perfect. See, let's understand more clearly. You can see here, market is coming down, and again a small doji candle, doji. Again, it's a downtrend. So we cannot able to tell that how far down it will go. How far down it will go. See, it reversed here. It reversed here. That's fine. But when you see a red trend, when you see a downtrend, that is the red candles, do not go and buy. We don't know till where it will crash. Till where it will crash. Are we clear? Say like for example, some areas we are anticipating earthquake. Can we assume that it will be only this much? It will be only 6.1 hectare. I'm telling, after coming, someone will scale it. After coming, someone will scale it. But before coming, someone is anticipating this areas, the earthquake is going to come. So be safe. So can we assume that in this area and all only it will be only 6.1? Let me sleep in my home itself. Will we do like that? So this is more or less similar to the consequences of earthquake, because if you buy in a wrong place, that will take our complete capital. It's coming as muted by the organizer. Funny Kumar, you cannot able to hear, you cannot able to speak, you cannot able to speak. So that is the only thing, but you can type whatever, however you have asked the question, that you can ask, I will answer you. How about red gap up? Red gap up, everything I'll explain you. Okay, so hold your questions. Let me come back. So are we clear with this topic? See, be very clear. In red candle, don't buy. In green candle, don't sell. This is the first parameter we are explaining you. Okay, so let's not get into more discussions on that. So please take the concept, whatever we are going to tell. So after that, after practicing, you tell me whether it is working or not. You should never use 5 minutes candle for a trading. That is a very limited time frame. Yes, we have a theory behind that. We also have a 5-minute study, but very strict theories we are having. I'll explain you when we get the time slot. So like from 10 days from now, we will be explaining about that. As of now, only daily candles, no other time frames. Okay, so coming back, so now let's see about doji. I believe everyone might have seen this. Now let's understand the doji. Doji in the sense opened, it's a indecision. Doji means the inference in the sense the consequences or whatever may be, whatever the result, it is called as inference. Doji in the sense opened, went high till here and came down till here, and after that closed almost or near to open, almost or near to open. So that is doji. So that means indecision. So opened here, went high till here, again came down, again came to the opened place itself. So the buyers or sellers, they are not clear how the market is behaving. They are not clear how the market is behaving. So doji, the first thing we have to remember is indecision. So next day market may either go up or market may even come down. But based on the location, as I told you, location is very important. So based on the location, if the trade is getting triggered, then there is a high possibilities of getting big profits. High possibilities of getting big profits. So we'll see the examples one by one. So this is gravestone doji. which is primarily used for selling, and this is dragonfly doji, which is primarily used for buying. Okay, so now location is very, very important. How to tell, how to make you understand the importance of location. Let me tell you. Say like for example, you are booking a 1 BHK home. You are booking a 1 BHK home. Say like for example, some value. Okay, you are booking in the ground floor. Since your parents are aged, for example, since my parents are aged, I am booking a 1 BHK home in the ground floor. But the builder is giving me 3 BHK home in the 4th floor where there is no steps. Will I accept this? The option is I can't sell immediately. There is one more. So let's understand that there is one more check. I can't sell it immediately. So will I accept this? Obviously, I will not accept because I have to see my personal things. So I will not see only the monetary benefits. I also have to see what is the consequences which is going to come. So location is very, 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 very important. So if you see the doji in a flat market, if you see a doji, there is no use. So it is like useless. If you see a doji in the flat market, it is useless. And say at the same time, after this doji, if you see a dragonfly doji, again it is useless because already the market is flat, trading in between 5 points or 6 points for the last 4-5 days. Same like that, when you see a gravestone doji or dragonfly doji in the flat market, it is useless. Just a minute, there is some small bug with my mouse. I'll just check it. So coming back, so while discussing about the doji, so if the doji, it's not only doji, any candlestick pattern has to appear on the location. That is, on the location in the sense it should come in the swing high or swing low. Say for example, a flat market is trading like this for the last 15 days. Here you get doji or shooting star or hammer, no use. There will not be any big impact. Number one. Number two, these kind of trade setups will not come in our trade setup at all. This kind of market we will not screen at all. We will not do stock selection. So where the doji or the candlestick pattern comes to a role, in the sense when market is completely trending up, here we are seeing a doji. There is some problem with the mouse. That's the reason I could not able to draw some straight lines. Okay, so please consider this as a doji. So for example, we are seeing a swing high. So after that, when we see a doji, yes, this doji is valid. And after that, market is coming down and we are seeing a swing low. Yes, this doji is valid. Again, market is reversed. Immediately we are seeing a doji. This is invalid. Who didn't understand my point? Samir, please see, it's not only Samir, everyone hold your questions. I'm teaching something. Please tell me you understood, you don't understood. So let's have the further discussions later. Are we clear? Because I am teaching something, you are asking me some other question. So this is not going to be a healthy conversation. I request. Okay, so I'll explain you again. I'm explaining you something. It's not only you, everyone, most of the members are posting some other questions which is not related to this, or something which I'm going to teach after 15 minutes or 20 minutes. So this will distract the entire conversation. So it's my humble request. Okay, so someone didn't understand this. Let me explain you again with the live charts. So this is M&M chart. So now I'll tell you which all location I will take the candlestick pattern, which all location I will consider as a candlestick pattern. Okay, so let me start from left. I can able to see. So okay, let me enlarge this. It is very small. As per this screen, okay, I'll consider this as a doji. I'll consider this both as a doji, and I'll not consider, because after a fall we are getting a doji. After a sharp fall, I will not consider because it is in the middle and there is no swing low. I'll consider this. So from 625 to 583, I can even consider this. And let me see if anything is left out. Okay, so did you understood now? So here, if I could able to see this doji, this I will not consider. This I will not consider because you can see it's appearing on the flat market. It's appearing on the flat market. So location is important. So location in the sense the signal candle. So what all the candlestick patterns we are going to study, that is called a signal candle. For example, we will tell doji as a signal candle, hammer as a signal candle. Okay, so that signal candle should appear only at the end of the trend. 15th September, let me check. September 15th. Yes, we will not take this. We will not take this because it is appearing after a short fall. It should appear in the tip or in the bottom. It should appear here. Clear? So coming back, so let's read these points one by one. Then after that, let's understand the full concepts. So how to trade with candlesticks. So now we are going to learn how to trade with candlesticks. That is what we are going to learn now. So after identifying doji, what we are going to do, that is what we are going to learn now. Okay. So now first we should understand the curve theory. When you open a chart, so what I'll do is, let me check some chart which is I have not seen for the long time. Havels. Okay. So let me take Havels. So first we should understand, does it looks like a doji? Yes, is it doji or not? It's not a doji. So straight away ignore. It is not a doji. See, when we see doji, it should be more or less, it should be similar like a doji. We should not consider something as a doji. It is not a doji, it's a hammer. Okay, so let's learn hammer later. So first let's understand doji. After that, let's go the candlestick pattern one by one. Mohit, yes, I want to teach you with long positions. So that's the reason I am looking for some other doji. I want to first teach you based on the long positions. After that, let's learn about short positions. Okay, let's take this. So can you consider this as a doji? Answers. Can we consider this particular candle as a doji? Yes, we can consider, because it looks like doji and it's exactly, the open and high is not same. If we check this, if we check this, open is 60.4 and close is 60.3. Open and high is not exactly same, but to an extent we can accept. Little bit, if it is little bit thick also we can accept. Just for an example, okay, GMR is a very bad stock, sir. we should not take an example in those kind of penny stocks. Okay, first of all, this itself is not recommended, but still I am taking just for an example. Okay, you can see here, even if it is looking like this, we can accept. So first of all, identifying the doji, that is the first step. So is that clear? We have identified the doji. This is the first step. Next, let's get into the curve theory. First, we are identifying the doji, and after that, let's take a chart with reasonable time frame from July. So now it's in the top of the curve or bottom of the curve. We have a scanner for doji also. Let's not take that. Let's understand here. So this is in the bottom of the curve or in the top of the curve? Bottom, accepted, right? So visibly can be able to identify. So now can we, since doji is a inference of long and short, we can do even long after doji, we can do even short after doji. So can we go for a short on this place if the low is broken, the next day candle? Can we go for a short? No, because it is already crashed and it is in the bottom. So let's not take any kind of risk by going for a short in this particular stock. So if we get a short signal, we will ignore. So now I'm going to explain you 8 points. Don't ask any questions. Please have patience and listen. Okay. So we have understood analyzing the curve theory. We understood it is in the bottom of the curve. So this is clear. Next, signal candle identification. So we have not seen hammer, inverted hammer, and other candlesticks. So forget. So as of now, signal candle means doji. Okay, signal candle means doji. So we have seen and confirmed that this is a doji. Number one. Number two, the analyzing the curve theory. It is in the bottom of the curve. Okay. Next. Check the swing low 5% and above in the last 10 to 15 day daily candles. Check for swing low 5% and above for the last 10 to 15 day daily candle. That means from here in the last 10-15 day candle, it should have been 5% and above. There should be a crash. That means from here, the last 10 days candle, there should be a crash more than 5%. So let's see. So current market price, for assuming that current market price is 60, 5% in the sense 3 rupees. So there should be a fall of 3 rupees from here, the previous 10 days. You can see here 60.2, that means from 60.2, 69.2, it has crashed 15%. It has crashed 15%. So the second point also is satisfied. So first is signal candle identification. Doji is right. Next, check for swing low and above 5% in the last 10 days candle. So the second point is also satisfied. It is more than 15% crash in the last 10 days. Okay, in the last 10 days. Next, entry above doji signal candle high on the next day. Entry above the doji signal candle high on the next day. Green candle for long and volume should be in green. So now here I am going to add volume. Okay, I have added volume. So now this is the signal candle. This is the signal candle, and above the signal candle you can go for a long on the next day. Above the signal candle in the sense, don't take exactly the high of the candle. Take little bit buffer. Give little bit buffer for the high. Say like if it is 60.2, the high is, then give 10-20 paisa high. Okay, give 10-20 paisa high, and the next day when the high is broken, you can make your entry here. And you can keep your stop loss. Okay, let's go by order. So entry above the doji signal candle high on the next day, you should enter only on the next day. If the entry is getting triggered after 2 days, it is not valid. Are we clear? If you are getting a doji candle, and next day if it is like this, and third day if it is getting triggered, no, it is not valid. You cannot enter here. You cannot enter here. You have to enter only on the next day itself. Next, stop loss will be just below the doji or 5%, whichever is less. So considering here, your stop loss will be just below the doji, just below. So don't take the entire, don't take the exact low. Give little bit slippage just below the doji. So let's see from here to here how much is the percentage. 61.1 is the entry, 58.7. So how much it's coming? 60, since it's a small stock, let's 68.1, 58.7, 58.8. 61.1. So it's 2 rupee 30 paisa. So is it more than 5% or less than 5%? 5% is 3 rupees. 5% of 60 rupees is 3.2. So is this more than 5% or less than 5%? It is less than 5%. So we will take this stop loss itself. We will not take default stop loss of 5%, where this is sufficient for the next day. So this is sufficient to put a stop loss. Are we clear? So our entry will happen here. Our entry will happen here. This will be our stop loss. This will be our stop loss. And read the other points. This is for delivery calls only. Very important thing. This is for delivery calls only. This is not for taking positions in intraday. We should be very clear on that. Are we clear? This is for delivery calls only. This is not to take the positions on intraday. Clear? So next, target of 5% or 1:1.1:2 as per your comfort. So now the stop loss is 2 point. Now the stop loss is 2.2, 2.3. You can take 5 rupees as a target. So in PNB, if you get 5 rupees as a target, do you think this is sufficient? Is this very less? 61.4 is the entry. Same day it has gone 63.68. So now this position is open. This position is open. Our entry happened here. This is the place we had an entry, and this is the stop loss, and the trade is open. While taking the position, we should make sure that the volume candle is green. The volume candle is green. So next, let me see what is the position left out. So this is for delivery calls only. Target 5% or 1:2 as per your comfort. Trail the stop loss once the stock is in profit. I'll explain you what is the trailing stop loss. That is left out on the previous day curriculum. So trailing stop loss, I'll explain you. So trail the stop loss once it is in profit. We can make positions on delivery, BTST and STBT. So now, simply by seeing this chart, how to arrive at target, I'll tell you. Just by seeing this chart, I'll teach you how to arrive at target. So the stock has fallen in the last 6 days this much. So we can expect this much as a reversal. Inverted A. Okay. Inverted A, or we can keep as a V structure. You can see here, stock has fallen this much, and we can expect this much reversal in the next 50% or equal to these number of days. If the stock has fallen for 10 days, 10 rupees, then we can expect in the next 6 to 7 days it will reverse 4 to 5 rupees. Are we clear? You can see here 1, 2, 3, 4, 5, 6, 7. 7 days stock has fallen. So in the next 5 to 6 days we can expect the stocks can reverse up to 5 rupees. Inverted A, for example, if a fall is like this, the reversal will be like this. If the fall is like this, the reversal will be like this. If the fall is like this, then we will not take an entry. Are we clear? I'll repeat again. If the fall is like this, the reversal will be like this, 50% of this fall. If the fall is like this, the reversal will be like this. How soon it is falling? As soon the stock will reverse. If the stock is crashing like this, we should not make an entry because there is some problem with the stock. If the fall is like this, continuous crash, we should not enter in that particular stock. Are we clear? I'll repeat this again. First, analyzing the curve theory. Analyzing the curve theory. That means you should see the chart first for the 3 months and understand whether it is in top or bottom. If it is in bottom, then look for a uptrend. If it is in top, then look for a downtrend. Don't do opposite direction. Number 1. Number 2, identifying the signal candle. Identifying the signal candle. So in the bottom of the curve, we have identified one doji. In the bottom of the curve, we have identified one doji, and from here we have to see left 10 candles, 10 to 15 days candles. Is there a fall of 5% and more? Signal candle, and from here, yes, there is a fall of more than 5% in the last 10 days. So we can make our entry here above this level. That is, on the next day, above this level, we can make our entry, and below the doji you can keep as a stop loss. And target, arriving target, you can keep, now I am telling approximate target, you can keep 65, 66 as a first target. Okay, and this is for delivery trades only. This is for delivery trades only, and you can keep 1:2 as a stop loss versus target. Say for example, if your stop loss is only 2.5 points, you can keep 5 points as a target, or 5%, whichever your comfort. See, someone is expecting only 5% on a monthly basis. Don't hold for big targets. Book small profits, come out. At least it should be 1:2 minimum. Okay, trail stop loss once the stock is in profit. So now come again. So this is a very important. When we entered, our stop loss is at this place. When we entered here, our stop loss is at this place. So now the stock is almost just above our cost. If the stock moves tomorrow here, shift your stop loss to above the cost. And when the stock moves the next day here, shift this stop loss to the previous position. When the stock moves at this place, shift your stop loss again, and when the stock crashes, your position will get closed. We can make positions in delivery, BTST, swing. So based on the number of days, you can keep the positions. Clarification required. So you are saying the entry should be made when recovery of 50% already made. No, sir. I am telling the target is 50%. If the crash is this much, your target will be, you are making your entry in the bottom level itself. This will be your target. Are we clear? So who didn't understand this 8 points? This is very important. With this, you can start investing your delivery trades. Now we can have question answers. Please ask questions only from this 8 points. Please don't ask anything apart from that, because other factors are getting covered in the other topics. Identifying the candlestick pattern, that is as of now doji only. I'll teach you about hammer, inverted hammer, everything I'll teach you. As of now, we have learned only about doji. Okay, inverted A concept you want to learn. Sir, listen carefully. There is a fall. So now you can see here. Assume that this is the place we are here. I'll finish the question one by one and I'll come. You can see here there is a fall like this. Then we can expect from here, we can expect 50% of this distance. From here to here, it is 9 rupees. There is some problem with the mouse. I have used 2 mouse, but today somewhere it is not working. Okay, from here to here. Okay, let's take, sir, from here to here, we'll consider this as a doji. From here to here, it is 10 rupees. That means reversal, if the reversal is working out, it will give 5 rupees at least in the next 5 to 8 days. That is the concept. I'll come, Vinod, I'll come. Mr. Gandharva Raj, are you clear with this topic, the inverted A? Entry will be at the top of the doji, that's right. Entry will be at the top of the doji. Entry will be at the top of the doji. It's not exactly at the top of the doji, just above the doji. Just above the doji only we will make our entry. We will not make our entry just exactly here. Just we will give some points, say like 10 paisa, 20 paisa, 30 paisa, depending upon the stocks, we will make our entry. Okay. So we are playing on correction. See, we can't tell that playing on correction. That is the reversal. Correction is nothing but a small retracement. Am I right? Correction is small retracement. We are not working on retracement. When we take 10% profit in a trade, that is not a retracement. I am telling a simple way to identify a short target. That is what I am explaining. Okay, so let me explain about the other concepts. Why 5% or doji is low? Is the fall is 5% will be risky. Rajini, little bit clearly ask your question. I cannot able to understand that. What does volume candle mean? How can we predict during? How can we predict it during the day? Volume candle green. Okay, I am not telling about volume candle green. The color of the volume should be in green. See here, this color when you are going to take delivery on this particular day. Okay, so the candle should be in green and also the volume color should be in green. So volume color means it is buying. Volume color green, that means the stock is in a buy mode. Volume color red, that means the stock is in a sell mode. Using stocking, not getting quality stocks. Let me check, sir. I'll come. When stop loss is considered as 5% or doji is low, if the fall is less than 5%, then will it be risky, right? That is the reason I am telling the fall should be minimum 5%. See, if you are identifying a signal candle, this is the signal candle. Okay, from here, this is the current market price. From here, the fall should be minimum 5%. The fall should be minimum 5%. Number one. Number two, Rajni, listen carefully. For example, if the doji low is this much, so you are making your entry here. Will you keep your stop loss here? No. Okay. No. We will ignore the trade. Are we clear? We will ignore the trade. No, we will not even take 5%. We will ignore the trade. If the technical stop loss, see, actual stop, the default stop loss is 5%, technical stop loss is 2%, 3%, fine. If default stop loss is 5%, technical stop loss is 4 to 5%, that's fine. If default stop loss is 5% and technical stop loss is 7%, we will avoid the trade. If the technical stop loss is 8%, we will avoid the trade. Why do you want to take that kind of risk? In the next day, due to gap up, entry price is not desired, then ignore the trade. I'll come. So next question is, sir, for long volume should be in green. So whether we are taking about the day on which the doji is formed or on the next day. Next day we are entering Sudarshan. See, this is the doji signal candle. You will come to know today is a doji only after the market gets closed. You will come to know only the market get closed. You will come to know that that is a doji. So it's a we will trade only on the next day. Okay. So next is, there are lot of stocks. How we will identify? We have a screener, Aditya. We have a screener. Don't worry about that. One screener, it will give you only the doji stocks. Oriental Bank. Yes, Same setup like Doji, same setup like PNB. Are we clear? So now, any doubts in this 8 points? Any doubts? Can we take a position based on this, whatever we have learned? I'll teach you about the scanner. I'll teach you about the trailing stop loss. Both I'll teach you just when you complete this. Are we clear? Any questions in this 8 points? No. Perfect. So we both should be convinced. Okay. So now looking for a how to fix 1, 2, 3 target. There is nothing called as 1, 2, 3 targets. There is something called as trailing stop loss. We will explain you. I'll explain you in the next 5 minutes what is trailing stop loss. Aditya, just for confirmation, yes, complete. Let me show you multiple examples now. Okay, let me show you multiple examples now. So we have learned about doji buying for delivery. Same trade is applicable for the other type of dojis. Yes. Can we tell this as a signal candle for a short selling? For a short selling, swing low, swing. There should be a swing low of 5%. You can see from 1300 it has gone up to 1470. So more than 5%. Right? So can we go short below this? Sankeet, why can't we short? Sankeet, we can go for a short below this. It's a signal candle, right? It's a signal candle. We can go short below this. But is the short triggered? The short is not triggered. So we should ignore this again. We should ignore this again. Again a signal candle. You can see short is not triggered. So this trade becomes invalid. This trade becomes invalid. Check today's close doji pattern. Two more I have to check. Daily candles by 9:15 a.m. If they met all 8 points, you can go for a long. Yes, Aditya. Perfect. How to identify doji in the correct time frame? It's only daily time frame I am telling. When did I tell you? When did I taught you different time frame, Bharat? It's only I am teaching you only in a daily time frame, right? ICICI General. Let me come. Now you can see this. Perfect. So now let's see about yesterday. 1371, 1296. 5% is met. Swing high. Is this 5%? 1375 into 5. How much? 68.75. Okay, and 1375 minus 68, 1307. 1307. Yes, 5% swing high is there. Okay, it's 5% swing high. So yesterday it was a signal candle. Am I right or not? Yesterday it was a signal candle. Am I right? So is the trade triggered today? I'll explain you Samir again. Yes, we will see that in detail more. Okay. So the trade is triggered on the top. The trade is triggered on the top. You can also go long here with stop loss of this place, but it is risky. Mr. Bath, as per our trade setup, trade is not triggered because trade has to trigger on the lower side. The location is on top, right? It is on the top of the curve. If you just minimize and see, it is on the top of the curve. So our direction is downtrend. Our direction is downtrend. So below this, we can go for a short, but it didn't work. So tomorrow, what we can do is we can go for a short below this level with the stop loss of this level. Just a minute. Let me just enlarge the screen. Now there is one twist. Listen carefully. There is one twist. I'll explain you. We can go for a short at this place. Below this, tomorrow if the candle is coming down, we can go for a short with a stop loss of this. So now let's see what is the stop loss. 1367, 1397. So can we take 30 point stop loss in this stock? Volume tomorrow only we will know, sir. How do we know tomorrow volume is green? Tomorrow, I am telling tomorrow, if the low is broken only, we can go for a short. Are we clear? So now, can you be able to keep 30 points as a stop loss for this stock? Do you think it is worth? Because if you go for a short, can you carry forward in cash market? Just one day before only we learned, right? If we go for a short in cash market, can we carry forward for the next day? Is it possible? No, it is not possible. So you should keep as a stop loss of 1%. Okay. For a short trading based on candlestick, even if the technical stop loss is 2.5%, you should take default stop loss as 1%. This is the new update for shorting. This is the new update for shorting. If the technical stop loss for a shorting is 2%, okay, you should take only 1% as a stop loss, or else don't try the trade. Let me write. Shorting can be done with cash market also, but you have to close the position on the same day. We can take up to 1.5%, nothing more than that. Clear? Whenever we take a short trade in future, for such cases, that I'll explain you at that time, sir. I will explain you in cash. Okay. Even if you are taking in future, you have to take only 1.5% as a stop loss, nothing more than that. So now I believe we are clear with this 8 points, right? So I'm supposed to explain you TSL and what else? Trailing stop loss I am supposed to explain you, and after that I have to show you the screeners, and after that, yeah, I have to show you examples. So now trailing stop loss. Yes, that we will see. Other candlestick pattern we will see. Trailing stop loss. So trailing stop loss in the sense, for example, you bought a stock at 453. Okay, this is the first action. You bought a stock at 453. You are putting stop loss as 440. Okay. Next, the stock is moving from 453 to 460. You have to shift your stop loss from 440 to 445. So revising just one step above. Next, if the stock is moving 470, then move the stop loss to 465. If the stock is moving to 480, then move the stop loss to 478. So technically the stop loss will keep on coming closer to the current market price. For example, if this is the way cash is moving, if this is the way the market is moving, we will trail our stop loss. When you make your entry here, my stop loss will be here. Okay, when the stock moves, my stop loss will move like this. Are we clear? This is entry on CMP and this is stop loss. We can tell us trailing stop loss. Yes, when we tell in simple, when the price moves up, we have to bring the stop loss closer to our price. When the current market price is closer to the target, or when it moves away from our current cost, we have to keep on revising the stop loss towards the target. So this is the example. You can just see this whenever you have time. TSL is very important. To take complete profit in stock market, TSL is very important. Nobody can make end-to-end profit. Nifty might have traveled 300 points in a day, but we can't take the entire 300 points as a profit, right? So what we have to do is we have to trail our stop loss. That is very important. That is very important. So when you trail your stop loss, you can try to take as much as good profits. Are we clear? So this is trailing stop loss. Next is examples. How much to shift first and second if the gap is 15? See, trailing stop loss will be acting based on situations. That is what I have mentioned here. We can't tell that you have to trail with 1%, you have to trail with 1.5%. It depends on the move. So trailing stop loss may hit. Sometimes it may hit immediately. Sometimes you will get good profits. So in between the stop loss and trailing stop loss, you can have 1%. Trailing stop loss in the cost, you can have 1% as a gap. So next is, let's see some examples. So let me open some stocks. Is this right? Doji. We can accept this as a doji. Okay. Even if it is not an exact doji, even if this is not an exact doji means exactly it should be like a plus, but it's not like that. But still we can accept this as a doji because you can see there is a clear fall and our entry is getting triggered here, and this is our stop loss. So let's see what is the point. 113, 11, 107. We are getting a very good trade. We are getting a very good trade. Yes. So inverse here you will not know, Prashant. You will be seeing only this. You will be seeing only this, right? So in this kind of situation, there is a good fall. It's a perfect doji, and your entry is happening at 113, and your stop loss is 107, where it is 3%. Where it is 3%. So it's a good trade. We can take it. No, I think its stop loss is more. Just a minute. 113 and just a minute. Let me see it again. 113. 108, 5%. 5% we can take this. Yes, we can consider because the fall is good. We can take it as a default stop loss of 5% and we can trade. See, it has given a reversal. And UCO Bank. UCO Bank, I think the stock value is very less, sir. See, don't trade in this kind of stocks, sir. Because the movement itself will not be very there. The complete movement will not be there. Don't take this kind of stocks, please. Next, let's see. Axis Bank. Okay, Mohit. Axis Bank, you should tell me. Now can we trade? Can we consider this? It's in the middle, right? It's in the middle of the curve. So why do you want to take a bet which is 50-50? Are we clear? Why do you want to take a stock? Why do you want to take a risk? Why do you want to take a stock which is already in a 50-50 decision? Don't trade. Bank Baroda. Same thing we have seen. No, it's just like PNB. It's Bank Baroda. So we can go for a long. We might have gone for a short here. We might have gone for a long here. Next is Apollo Tires. There was a good fall, I think. Apollo Tire. See, it's a perfect doji. There is no doubt in this. Anyone have any doubt in entering in this stock? Anyone has a doubt in entering in this talk? Bharat, what is your doubt? It's a clear downtrend. You can see there is a complete clear crash. There is a complete clear crash. After that, you can see a doji. Your entry is happening at this place. Your stop loss is this. So what is the risk and reward? 165, 161. 4 points, 1.5 points stop loss. Do you think, sorry, how much? 165, 160, 161. 2.5 point is the 2.5% is the stop loss. Do you think this trade is a bad trade? It's a very good trade. Don't leave these kind of trades. Ambuja Smith. Ignore. It is not a doji at all. Do you think this is a doji? See, this body is clearly visible. Body is clearly visible. Apollo tire you can't take because already the entry is triggered. Already the entry is triggered. SBIN. PPCL, let me check. SBIN, no entry. Why do you want to make your entry here? It's in the middle, number one. Number two, doji is in the, can you consider this as a doji? It's in the middle part. BPCL. BPCL, I was seeing multiple dojis in the last 15 days. No entry. Why do you want to take BPCL, sir? Do you see any candlestick pattern here? No entry here. So now everyone understood the concept of this 8 points trading with candlesticks. So curve theory, identify the curve theory, take the daily chart for 3 to 6 months time frame. Top of the curve, do not go for long. It's not for buying. Bottom of the curve, do not go for short. BPCL, it's a no trade zone, sir. I don't have anything to do with BPCL. That much I can see. So let me check with the Phoenix setup. It's on resistance. So again, it's there is nothing to do with BPCL. When we enter in the stocks like this only, it will not move, it will not give profit, it will not give loss, it will test our patience, and we lose money in that. No trade in Amaraja battery, Wipro. No trade, it's not a BPC, it's not a doji. Okay, so coming back, no, I'm not here to review stocks. So next, so now we are going to see other candlestick patterns. Okay, we are going to see other candlestick patterns. So we have learned about doji, and now shooting star we will keep it aside, hanging man we will keep it aside, hammer. Okay, hammer, it's a single bullish single candle reversal pattern. Okay, that means as like doji, along with one candlestick itself we can able to understand it is a signal to entry or not. It is a signal to entry or not. With one candlestick pattern itself we can understand whether it's a signal to entry or not. Number one. Okay, so this hammer market ideally gaps up to hammer. Color can be red or green. So this color can be red or green. There is no color condition that this candle pattern should be green or red. Okay, it can be either in red or green. Green hammer is more reliable than the red hammer. Number one. So when we see about the hammer, color can be red or green. Lower shadow is at least 2 times of the size of the real body. You can see here, this is the real body. So lower shadow is at least 2 times as the size of the real body. That means at least it should have this much. At least it should have this much. Simply only this much is there. We can't tell this as a hammer. Okay, so how to use this hammer? This stories you can read, the psychology you can read it. How to use this hammer? You can see here, swing low. It should be on a swing low. Same like that, there should be, it should come in the bottom, it should come in the bottom. So you can see here above this we have to make our entry. In chart it is shown, it's a generic candlestick pattern, so it has shown the location only, but it's not a trade setup. So if we get a hammer like this, we will not trade. We will not trade. Instead of doji, replace this condition to hammer. Instead of doji, replace the condition to hammer. Are we clear? Instead of doji, replace this condition to hammer. Someone told some stock which was like hammer, I forgot. So above this we can make our entry. Let me show you some stock. See this. $176, 177, 176, 174. So we cannot consider this as a hammer. You can see here the wick is very small. The wick is very small. At least if the wick is little bit more, it should be like this. Then we can consider as a hammer. So don't consider, don't how to say, this trade has given a profit, but don't consider, don't convince yourself with technicals is been accepted. We can accept this as a hammer. Can we make our entry on the next day itself for hammer, since the rule is there for doji? Yes, perfectly right. Other than the doji replacing to hammer, all the rules are same. All the rules are same. Mariko, yes. Just a minute. See, it's a perfect hammer. It's a perfect hammer. The last 10-15 days there is a crash, and tomorrow if we get an entry here, this will be our entry, this will be our stop loss. So entry is at 357, stop loss is 352. 352 we can 5-point stop loss, that is less, the stop loss is less than 2.5%. So do you think this is a good trade? It's a very good trade. It's a very good trade. Clear? Hammer and doji is not same, sir. How can hammer and doji be same? It's a different candlesticks, right? So I need just 1 minute of break. So you can type all your questions here. I'll come and answer. I'll just take 1 minute of your time. Yes. So there is any scanner for doji? Yes, I'll provide you scanner for doji. All those things I'll give you. Okay. So from this we can expect Marico to go outside. Yes, that is right, Samir. And hammer and doji is not same. For execution purpose is same. Please explain how hammer concept. So that's what I'm explaining so far, right? In doji, I have a question. I have seen if we see a stock in doji pattern and we can trade in stock future, then result will be same. Sir, don't speak about stock future now. Have we completed stock future curriculum? No, right? So that is what I'm telling. Don't speak about which we are not supposed to discuss now. Okay, so because correlation, we have a very important factor in correlation, sir. Obviously, both will move in the same direction only. But what happens? Stock future, can you able to take 5% stop loss, sir? Can you able to keep 5% stop loss in stock future? Is it possible? For example, SBIN. Okay. For example, SBIN. SBIN, what is the current market price? Say like 350. So what is 5% stop loss? If you buy 100 shares SBIN, okay, into this loss is affordable. Say for example, SBIN lot size is 3000. Can you able to keep stop loss as 52,500 rupees? Is it possible? Not possible, right? So that is what I am telling. For future, we have to handle in a different way, where we will have a stop loss less than 1.5%, where we have to learn a complete theory that will take 3 classes. So please, let's not discuss anything about the forthcoming classes in coming days in the current session. Hammer buying pressure is there, but buyers are active since bottom is having a wick. Then how signal candle for long? Okay. So this is done. So we will go to the next candlestick pattern, inverted hammer. Okay, inverted hammer. So it is just same, like the concept is same like hammer, but it is reversing. It is just reversing. So the image is completely reversed. The image is completely reversed. You can see here the same thing. So above this, go for a long, keep a stop loss at the bottom. So volume candle, want to check it is in green or not. Madhusudan, today is the signal candle day. So why do you want to check the signal candle, volume candle today? This is the signal candle, right? So tomorrow only you are supposed to make your entry above this level. Tomorrow only you have to make your entry above this level. That means you are supposed to see the volume chart tomorrow only, not today. Are we clear? Both hammer and doji is indecision or reversal. Doji only is indecision. Hammer is for clear buying. Inverted hammer is for clear buying. Shooting star is for selling. Hanging man is for selling. Okay. So next. So coming to inverted hammer, you can see here bullish single candle reversal pattern. Market ideally gaps down to inverted hammer. Color can be red or green. Upper shadow is at least 2 times of the size of the real body. So same like that, the shadow should be at least 2 times of the real body. Clear? So for an execution purpose, let's see how to execute. Let's see in the charts. Just now I saw somewhere the Apollo Tyres itself. You can see this. You can consider this as an inverted hammer. Here it is a hammer. It is a hammer. Am I right? It is a clear hammer. But did the entry triggered here? Did the long triggered here on the next day? Yes or no? This is a hammer. We can consider this is a hammer because you can see the body is 2 times of the real body. The tail is 2 times of the real body, the shadow, and next this becomes invalid because top or bottom is not triggered, and we can consider this as an inverted hammer because considering the location, there is a good crash, number one, and the shadow is more than 2 times of the real body. So there will be a small wick on the bottom. If you see, your entry is triggered here 152 with a stop loss of 145, that is on 3% of 3.5% of stop loss. You can see it has given a clear rally. Don't see about next many days. See, in the next 3 days itself it has given more than 5%. We can consider this as a doji. In this case we can consider as a doji. You can see here next day itself entry has given and it has reversed. Open high, open low is not applicable for hammer, sir. That is not at all required. That is a completely a different concept. So now I'll show you one more thing. One more. So now answer me. This and this is both the candlestick look like same or different? Forget about the color. Forget about the color. Does both the candlestick look like same or different? Forget about the color. But why does it have a different name, sir? Sir, how it is different? So forget about the color, the body. See, both are same only. Okay, it's both are same only. The both are same only. The only difference is why there is a two different name, because this hammer is found in the bottom of the curve and hanging man is found in the top of the curve. It should come in the swing high it should appear, and swing low it should appear. Same goes for these two, inverted hammer and shooting star. Are we clear? Inverted hammer and shooting star. Can't hammer come at the top? If you see a hammer on the top, that name is called as hanging man. When you see a hammer pattern on the top, that candle name is called as hanging man. Say, like for example, I have a twin child, but I keep a different name. I have a twin daughter, I keep a different name. So same like that, when you see this same candlestick pattern on the top, that is hanging man, and when you see on the bottom, that is hammer. When you see in the flat market, that becomes invalid. Same like that, shooting star. When you see this candlestick pattern on the top of the curve, that is shooting star, and when you see the same candlestick pattern on the bottom, that is called as inverted hammer. So this two candlestick patterns are used for shorting in the sense going for a short selling. So let's see some examples for that. Location matters, sir. Are we clear? Location is the very important thing which we have to see. So for that we should see the curve theory. Flat market, do we need to consider only the corresponding stock or which is respect to index? Flat market, oh Rajni, let me read your question again. Do we need to consider only for the corresponding stock or with respect to index? Absolutely, you have to correlate with index. If you are going to trade any long trade, then index should have a positive. Then index should be positive. So shooting star and hanging man at the top, then expect a downtrend. Perfectly right, Samir. We cannot consider this as a hanging man because how to say, body is not so clearly visible. We cannot able to consider as a doji or else as a hanging man also. So we ignore. Yes, Priyaranjan. That is what I am telling. We can consider, considering the tweak high, we can consider, but to be specific with the technicals, this is rejected. Let's not convince ourselves on technicals. Are we clear? Let's not convince ourselves on technicals, because that is where it's going to give you the results. That is the one which is going to give you the results. If you are going to buy an iPhone with a budget of 40,000, go only buy the iPhone, come back. Don't buy a Samsung or Micromax for 40,000 rupees. Even Samsung is fine, but don't buy Xiaomi or Micromax for 40,000 rupees. Please give one example of correlating buyer and seller on hanging man. There is no correlation with buyer and seller on hanging man. There is no relation. You can go for a short straight away with applying the same strategies. Why do you want to correlate buyer and seller? $672, 716. So it is not coming on 5%. Can we consider this as a doji? Is both charts are applicable only for shooting star? I didn't get you, sir. I didn't get you. Just be specific. So next. So if you consider this as a doji, below this doji you can go for a short and keep a stop loss just above the doji. Technically that is not possible because the stop loss will be very high. So keep a stop loss of 1%. Hammer and reversals, hammer is used only for shorting. So hammer and inverted hammer is used for buying, and shooting star and hanging man is used for shorting. In very simple, these all are called as pin bar candles. So how it will be a pin? Have you seen the first type of, today we are getting lot of pins. Today we are getting different type of pin. So if we look for a traditional pin, see this. Does it look like a pin? So this is the traditional pin. Am I right? This is the traditional pin. So these things are called as pin bar candles. So what is the pin bar candles? You can see here. These all are called as pin bar candles. 1, 2, 3, 4, 5, 6, 7. So these are all called as pin bar candles. Most effective reversal candles. Most effective reversal candles. That means the accuracy will be very good and the stop loss will be less. Yes, we can consider this, but 271, 306, yes, we can consider this Wokat Pharma. But now see the location, whether the location is in, where is the location? Priyaranjan, forget about hanging man, shadow is more, no, that is not a concept, forget about that. There is no concept behind the shadow and all, shadow or weak and all, there is no concept. It works in Nifty. Yes, it will work in Nifty also, no doubt. It's in middle, so we have to ignore this. It's in middle, so we have to ignore this. Or else, if you feel like you can take a small risk, yes, you can take 281 above, you can buy, and you can keep a stop loss of 270. So the stop loss is as good as 4%. It is little bit high only. Mohit, we should not consider only doji pattern. We should apply all the patterns. All the 5 pattern is very important. Yes, Sundrabad, that's right. So are we clear with the 5 candlestick patterns? So now I require one homework you have to send to me, that is on support@stockphoenix.com. So we have 2 days. You identify at least 5 to 10 charts where you can able to see the doji. Sorry, all these candlestick patterns. Identify one shooting star, just take a screen print, send to us, and just mark a paint on that. It's a shooting star, it's a hanging man, like that. Clear? So the rest of the candlestick patterns we will see on Monday, and this is the homework for this week. And what else? Nikhil sir, I'm not sure. I'll just check. Post this in Telegram support line. I'll check and I'll reply to you, sir. Okay. So what else? So please go through these particular 8 points, and screener for quality stocks. It's here. You can see here. There is the screen. There is the screener available in this page. You can go and search. Use the screener. Clear? I have attached all the screeners here. You can use in this with the screeners. You can use it. See, quality starts in the stocks. We can't tell something as a quality stock. We are getting the trades. We are getting the screeners will give us the result. We should ensure whether it is a quality or not. Clear? So done. Thanks for your time, and happy weekend. We'll meet on Sunday. We'll meet on Monday evening. Please send your homeworks as soon as possible in the 2 days. So we will review it and we'll discuss on Monday. Thank you.